Financial Regulations, Chapter 3 to 5, Expenditure Control and Warrants. Copyright Notice. All rights reserved. No part of this publication may be reproduced, distributed, or transmitted in any form without prior permission from the publisher. This material is specially prepared for exam success in financial regulations and is designed to simplify complex government procedures into clear, testable knowledge. Introduction. This section can make or break your exam. Chapters 3 and 4 are about one thing: control of government money. Who can spend, when they can spend, and what happens if they get it wrong. And here is the rule you must never forget: no expenditure without authority. Break that rule and the officer pays for it personally. Now, let's break it down clearly and completely. Chapter 3. Expenditure Authorities. Financial Regulations 301. Annual Appropriation Act. The Annual Appropriation Act, backed by Section 80 of the Constitution, is the legal instrument used to limit, control, and arrange the disbursement of federal government funds. Core exam rules. Do not miss this. Every expenditure must be incurred on the authority of a warrant or an authority to incur expenditure, AIE, issued by the Minister of Finance. No officer, under any condition, should incur expenditure, even if it is included in the budget, without authority. If an officer does that, he acts on his own responsibility and will be held personally and financially liable. Financial Regulations 302. Recurrent Expenditure. Recurrent expenditure is paid from the Consolidated Revenue Fund. But listen carefully. It can only be paid when there is a warrant or an AIE signed by the Minister of Finance. Without that, the Accountant General will not accept the charge upon the CFR. Forms of warrants. Very important. The authority of the Minister of Finance comes in these forms: Provisional General Warrant, Recurrent Expenditure General Warrant, Supplementary General Warrant, Contingency Warrant, Supplementary Contingency Warrant, Virement Warrant, Supplementary Statutory Warrant, and Authority to Incur Expenditure, AIE. Financial Regulations 303. Provisional General Warrant. This is used when the Appropriation Act has not come into operation. At the start of the financial year, it allows government to continue running, but only for a maximum of 6 months and not beyond the previous year's level of spending. Administrative requirements. Original copy goes to the Accountant General. Copy goes to the Auditor General, and it must be published in the Federal Gazette. Financial Regulations 304. General Warrant. This is the main warrant. After the budget has been approved, it allows the Accountant General to release funds for personnel emoluments and other government services. It also authorizes officers to incur expenditure. Important control point. The Minister of Finance can exclude certain items for tighter control. Administrative process. Original copy to Accountant General, copy to Auditor General, and publication in the Federal Gazette. Financial Regulations 305. Supplementary General Warrant. This is used when additional funds are approved through a Supplementary Appropriation Act. It allows release of funds for additional salaries and services. Same administrative rules apply to Accountant General, to Auditor General, and Gazette publication. Financial Regulations 306. Supplementary Contingencies Warrant. Listen carefully. A supplementary contingencies warrant may be issued only in very exceptional cases where virement is not possible and where urgency is so critical that delaying funding would cause serious injury. To public interest, before a Supplementary Appropriation Act can be passed. Now, focus on the process. Authority is conveyed through two actions. First, a contingencies fund warrant, allowing the Accountant General to transfer funds from the contingencies fund to the Consolidated Revenue Fund. Second, a supplementary contingencies warrant, authorizing actual expenditure. Important control. Original copies, Accountant General, signed copies, Auditor General, and finally, the Minister of Finance, will notify officers controlling the votes. Financial Regulations 307. No direct charge to contingency fund. This is a strict rule. Under no circumstances shall expenditure be charged directly to the contingency fund. Repeat that. No direct charge. Instead, all such expenditure must receive covering approval from the National Assembly at its next meeting and must be included in a Supplementary Appropriation Act. Financial Regulations 308. Contingency Fund Replenishment. Now, once funds are used, they must be replaced. This is called replenishment, and the authority is a Supplementary General Warrant, which allows the Accountant General to transfer funds from the Consolidated Revenue Fund back into the Contingency Fund. Financial Regulations 309. Virement Warrant. Now, VMA. This means transfer of funds from one subhead to another, but only under specific conditions. It must arise from circumstances that were not foreseen during preparation of the annual estimates. So, if one subhead needs more funds and another subhead has savings, then virement can occur, but approval is required from the National Assembly. Financial Regulations 310. Conditions for virement. Now, pay attention. This is highly tested. Virement is subject to three major conditions. Condition 1. The amount to be vired must not exceed limits set by the National Assembly. Condition 2. Virement must not create a new subhead or reintroduce items already rejected by the Estimates Committee or the National Assembly. Condition 3. Virement must not be used to answer or correct queries raised by the Auditor General on improper expenditure. Financial Regulations 311. Variation in establishments. Now, any change in establishment or allowances, whether in annual or supplementary estimates, even if virement is not involved, must be approved by the Minister of Finance and the Office of the Head of Civil Service, and this approval must be communicated to the Auditor General. Financial Regulations 312. Supplementary Statutory Expenditure. This covers additional expenditure beyond existing warrants, specifically for votes chargeable directly to the Consolidated Revenue Fund under the Constitution. Control process. Original copy to Accountant General, signed copy to Auditor General, and again, Minister of Finance notifies controlling officers. Financial Regulations 313. Authorized expenditure limit. Now, this is critical. Authority to spend is limited to the amounts provided in approved estimates and supplementary estimates. No officer can exceed this limit without approval from the National Assembly. And how is approval obtained? Through supplementary provision or virement. Financial Regulations 314. No revotes of recurrent expenditure. Important rule. Unspent funds from previous year cannot be reused. That is, no revote. If additional funds are needed, you must apply for supplementary provision or virement. Financial Regulations 315. Application for supplementary provision. Applications must be submitted to the Minister of Finance using General Form 57. Copies go to Auditor General and head of service if personnel issues are involved. Now, decision making. The Minister of Finance will decide after consultation, where necessary, whether the request is justified and in the public interest, then decide whether to include it in supplementary estimates or provide funds immediately via contingency warrant or virement warrant. Financial Regulations 316, Application for virement. Now, procedure. For establishment-related virement, submit Form Gen 57 to the Head of Civil Service. Deadline, first quarter for financial virement. Submit to Budget Office. Copies to Accountant General, Auditor General. Deadline, 10th month. Late submission, rejected. Strict rule, no transfer between recurrent and capital. All applications go through Minister of Finance, then to National Assembly for approval. Before warrant is issued, records must be maintained and sent within 1 month to Accountant General and Auditor General. Financial Regulations 317, Control on savings from virement. After virement, the original subhead must not be overspent. Spending must remain within the reduced balance, and officers controlling votes are personally responsible for compliance. Financial Regulations 318, Capital Expenditure, Development Fund, Capital Expenditure is paid only from the Development Fund and cannot be incurred without a warrant signed by the Minister of Finance. Without this, the Accountant General will not accept the charge. Types of warrants include Provisional General Warrant, General Warrant, Supplementary General Warrant, Supplementary Warrant, Special Warrant, Virement Warrant. Financial Regulations 319, Provisional Development Fund Warrant, used when capital estimates are not yet operational. At the start of the year, the President authorizes withdrawal from Development Fund. Duration, not more than 6 months, and based on previous year's level. Control, original to Accountant General, copy to Auditor General, and must be published in the Federal Official Gazette. Financial Regulations 320, Development Fund General Warrant. This warrant authorizes funding for capital projects as approved in annual estimates. It allows Accountant General to release funds, officers to spend funds, but only after National Assembly approval. Important power. Minister of Finance can exclude certain items for special control. Control again. Original to Accountant General, copy to Auditor General, and publication in Gazette. Remember this, government funds are never spent freely. They are controlled, authorized, and accountable. Master these sections and you are already ahead. Chapter 4, Expenditure Classification and Control. Financial Regulations Section 401, Officer Controlling Expenditure. Under Financial Regulations Section 401, all disbursements of public funds shall be made by the Accountant General, based on warrant authority, and accounting officers who control votes in their ministries, departments, and agencies. These officers are clearly specified in the annual estimates, together with the votes they control. Critical Exam Rule. Financial Regulations Section 401. Ultimate responsibility always rests with the accounting officer, even if duties are delegated. Others make payments. He remains responsible. To the Federal Executive Council. Personal Liability Warning. Financial Regulations Section 401. Any officer who makes, allows, or directs any payments without proper authority will be held personally responsible for the amounts involved. Also, any officer responsible for accounts will be held liable for inaccuracies in those accounts. Financial Regulations Section 402. Vote book. Very, very important. Under Financial Regulations Section 402, every officer controlling a vote must monitor expenditure against the approved estimates. They must keep a vote book, updated at all times. What must be recorded? Financial Regulations 402. At the top, amount approved in estimates, supplementary additions with warrant number, reductions by variance shown in red ink. In the body, actual expenditure, known liabilities, balance available, additional control duty. Financial Regulations Section 402. Officers must check schedules from Accountant General and investigate any payment that does not appear in the vote book. Purpose: to detect fraud. Exam trap: failure to record liabilities leads to false balance. Financial Regulations Section 403. Entries in vote book. Under Financial Regulations Section 403, every expenditure must be entered as the gross amount. Also, all liabilities and commitments must be recorded immediately. Examples of liabilities. Financial Regulations Section 403. Indents, requisitions, local purchase orders, job orders. When payment is made, adjustments must be done. If there are supplementary or variance changes, they must be updated in the vote book. Exam trap: liability is recorded before payment, not after. Financial Regulations Section 404. Delegation of expenditure control. Under Financial Regulations Section 404, an accounting officer can delegate expenditure control to a subordinate officer through a formal written instruction. Condition: the delegated officer must maintain a vote book. Very important limitation: he must not subdelegate without approval from the officer controlling the vote. Exam trap: delegation does not remove responsibility. Financial Regulations Section 405. Authority to incur expenditure. AIE. Under Financial Regulations Section 405, this is used when the accounting officer authorizes another officer to incur expenditure and sign vouchers. Conditions. Financial Regulations Section 405. It must be in writing, supported with cash backing. Copies must go to the officer concerned, the sub-accounting officer. Responsibilities. Financial Regulations Section 405. Issuing officer records the AIE as a commitment in the vote book. Receiving officer keeps a vote book and submits monthly returns showing expenditure, liabilities, balance available, with copies of vouchers. Sub-accounting officer ensures the AIE limit is not exceeded. Financial Regulations Section 406. Inter-Ministry AIE. Under Financial Regulations Section 406, if AIE is issued to another ministry, that ministry must keep a vote book, submit monthly returns, attach vouchers. Exam trap: control must be maintained, even across ministries. Financial Regulations Section 407. Vote book control rule. Under Financial Regulations Section 407, all documents, vouchers, indents, LPOs, job orders, agreements must be stamped, entered in vote book, and initialed before payment is approved. Officers must confirm that entries have been made. Exam trap: no vote book entry, no valid payment. Financial Regulations Section 408. Notification. Monthly control system. Under Financial Regulations Section 408, after each month, The Accountant General sends payment schedules, vouchers. Accounting officers must check, verify, report discrepancies immediately. Financial Regulations Section 409, Fraud and Irregularities. Under Financial Regulations Section 409, if any serious irregularity is detected, the officer must investigate immediately, report, inform the police if fraud is suspected, prevent recurrence. If public funds are lost, action is taken under Chapter 25. Penalty. If payment was unauthorized due to wrong certification, the responsible officer will be surcharged. Financial Regulations Section 410, Certification of Vouchers. Under Financial Regulations Section 410, when an officer signs a voucher, he confirms services were performed, prices are correct, authority exists, calculations are correct, payee is valid, goods were received or properly issued. Exam insight. This is full responsibility. Financial Regulations Section 411. Officers authorized to sign. Under Financial Regulations Section 411, only officers not below Accountant 1, Senior Executive Officer Accounts are authorized to sign vouchers. The accounting officer must provide specimen signatures to internal audit, checking unit, paying officer. Financial Regulations 412, Certification of Payments. Under Financial Regulations Section 412, when a contract involves supply of goods, execution of work, there must be a certificate attached to the voucher. This certificate confirms three things. 1. Payment is in line with contract terms. 2. Goods have been received. 3. Work has been properly done. Payment on account. Very important. If payment is made in stages, only the value of work already completed and certified can be paid. No extra amount must be claimed. Deductions. Exam favorite. If penalty or fine is applied, only the net amount will be paid and the deducted amount must be credited to the appropriate revenue head. Financial Regulations 413, Lapse of Authorities. This is a very common exam question area. Listen carefully. Recurrent expenditure. All warrants for recurrent expenditure lapse at the end of the financial year. If any balance is still needed, it must be provided again in the next year's estimates. Capital expenditure. Very important. 3 rules. Rule 1. If funds have not been cash backed from the Consolidated Revenue Fund to the Central Capital Account, CCA, they will automatically lapse at the end of the financial year. Rule 2. Exam trap. If money is sitting in the CCA and has not been transferred to the ministry account, it will lapse by 31st March of the following year. Rule 3. If money has been cash backed into the ministry account, it will not lapse, but it must be used only for the purpose stated in the warrant. Financial Regulations 414. Unspent balances to lapse with financial year. Payment timing rules. The date of payment is the day the transaction is recorded in the account. Strict prohibitions. You must never use anticipated savings to make payments early. Withdraw unspent funds to keep in reserve. Move money into deposit accounts or suspense accounts to avoid lapsing. Important balance rule. Expenses meant for a particular year must be settled within that year. They must not be delayed or hidden to avoid exceeding the budget. Stores rule. Unallocated stores must not be drawn before they are actually needed, just to use up budget. Financial Regulations 415, Economy in Expenditure Rule. This is a direct exam statement. Money must not be spent simply because it has been voted. Financial Regulations 416, Contractor Payments. A contractor is entitled to payment if the project is in the approved budget and a certificate of no objection has been obtained. If funds are not available, the Accountant General will determine unpaid amount, seek approval from Minister of Finance and include it in the next year's budget through supplementary appropriation. Financial Regulations 417, Expenditure Classification. All expenditure must be strictly classified according to the estimates. Funds must only be used for the purpose they were provided. If wrongly charged, the expenditure will be disallowed. Financial Regulations 418, Payments between government units. All such payments must be backed by cash or check and must be recorded in cash transfer accounts, not directly to the expenditure subhead. Financial Regulations 419, Expenditure Apportionment Control Timing. Spending should be spread evenly throughout the year. Liability Rule. Officers controlling votes are fully responsible for unauthorized expenditure or spending beyond allocation. Financial Regulations 420, Prepayment Checks. Before making any payment, the sub-accounting officer must confirm 1. That the expenditure is properly authorized by warrant and correctly classified. 2. That the voucher is correct, properly completed, and signed by the right officer. 3. That all deductions have been made, such as pension contributions, repayment of advances, and other liabilities. Financial Regulations 421, Voucher Classification Rule. A voucher's classification must not be changed arbitrarily. Only the officer controlling expenditure can make changes and must update the vote book accordingly. Financial Regulations 422, Expenditure Settlement Rule. Payments must be made within the same financial year in which services were rendered. Responsibility. Officers must follow up on claims, send reminders to ensure submission. Negligence Rule. Failure to follow up will not affect the contractor, but the officer will be held responsible. Important exception. If a claim is valid, payment must not be delayed just because of minor errors in the voucher. Those errors can be corrected later. FR 422, Commitment Recording Rule. All commitments must be entered as liabilities. Contracts, LPOs, job orders, signed agreements, and must be stamped, entered into vote book. Chapter 5, Standardization and Accounting Procedures. Financial Regulations 501, Authority of the Minister of Finance. The Minister of Finance has full authority over all financial and accounting matters of the Federation, except where another minister is legally assigned. Key function. The minister issues financial regulations to guide all public officers on receipt of funds, disbursement of funds, management of public assets. Financial Regulations 502, Issuance of instructions by the Accountant General. The Accountant General issues Treasury circulars, accounting manuals. These guide accounting officers and staff on how to apply financial regulations. Financial Regulations 503, Standardization of Accounting Procedures. Because accounting staff move across ministries, there must be uniform procedures, so all MDAs must use Financial Regulations, Treasury Accounting Manual, Treasury Circulars, Financial Regulations 504, Approval of Procedures. Any new procedure or major change must be approved by the Accountant General after consulting the Auditor General. Financial Regulations 505, Purchase of Accounting Equipment. Purchase of accounting equipment requires approval from the Accountant General. Financial Regulations 506, Flowchart Requirement. Any new procedure must include a detailed flowchart submitted to the Accountant General. Financial Regulations 507, Circulation of Guidelines. All approved accounting codes, audit guides, treasury circulars must be circulated to all officers for compliance. Financial Regulations 508, Creation and modification of National Chart of Accounts. Any creation or modification of codes to the National Chart of Accounts shall be approved by the Federation Accounts Allocation Committee, FAAC. Application for such creation or modification shall be routed through the Accountant General of the Federation. Financial Regulations 509. Circulation of National Chart of Accounts and Accrual Accounting Manual. The approved National Chart of Accounts and Accounting Manual, as well as all Treasury circulars issued by the Accountant General for MDA and other arms of government, shall be circulated to MDA and other arms of government for their guidance and compliance. Financial Regulations 5010. Uniform Financial Year. All MDAs must operate from 1st January to 31st December. Finally, at this point, you now understand how expenditure is controlled, how authority works, and who takes responsibility. This is where most candidates fail because they miss the details, the conditions, and the consequences. If you master this section, you are already ahead of the average candidate.